Thank you. Good evening, all of you, and thank you for dialing into this call. I know it is late evening on Saturday. We hope to finish this call in about an hour or so. And I have some opening comments, and after that we can start the questions. The first point that I want to mention is that this is the quarter which did not even have 1 month of any moratorium, so to speak, right? Because the previous quarter had August as a moratorium. I want to give some perspective. When we are dealing with a self-employed segment, which is like medium to small ticket kind of segment, even in pre-COVID times, it is normal to have about 2% of the opening book as a slippage. If you see our performance in the last few years, you will find that anywhere between 2 to 2.25, maybe a quarter was an exception or something. But generally, that is the kind of slippage that is expected. And then, of course, we did quite well on recovery. We used to have at least 50-60% of those recovered, primarily because we are dealing with secured business. Our loss given default has been quite under control in all these years, and it has not been such a big problem to manage this segment, and we have developed a reasonable level of expertise on that. Now, talk about COVID. March to December, first of all, March to August was moratorium, and then August to December we have to honor the Supreme Court decision. So March to December, banks have not declared any NPA. So, in a COVID hit situation, to expect that there will be no slippage, even the normal 2%, I think one needs to put it in perspective as to underlying portfolio usual slippages is bound to happen. For 10 months, there has been nothing at all. This is the first time this year something, and hopefully by March quarter, if this Honorable Supreme Court issues sorted out, then things become a lot more normal. Now, actually, the slippage is not that big a concern as the inability to proceed on the recovery actions. If you don't make it a NPA, then you can't proceed for various actions for recovery. Now, normally, if an account goes into NPA, by 3rd or 4th month, you are able to kind of get some way forward on the customer, some settlement, some recovery plan, some sale, whatever. And then within 6-9 months, you are able to resolve majority of the cases. Now, in this current situation, we find ourselves in a situation where we have to use, we cannot use too much of legal this thing. We have to use a negotiation with the customer to kind of recover. And despite that, we have been able to recover about 30 crores of NPA, and that doesn't even include gold auction. I mean, the gold NPA recovery has been negligible in this particular quarter. So you have to put it in that perspective. Barring any nasty or unforeseen surprises, we believe that we have reasonable understanding of the portfolio where it is proceeding. We have given you very informative numbers in terms of collection efficiencies. So, things are improving, no doubt. But customers who have been deeply impacted by COVID are taking longer to come back to some level of business performance such that they can repay the loans. Of course, there are intervention tools. We have ECLGS. We have COVID relief for the personal loans. We have MSME restructure. There again, we find different responses. I have gone through many customer responses. Some customers who are non-delinquent as on February 29, and let's say they have not paid us any money since August. When you offer them these relief, they have already planned to close the business, sell the property, and give you the money. Now, they are not interested in any of these interventions because they feel that they are just going to sell the property and pay off the loan, and the bank will have to wait maybe 1 or 2 months to make that happen. There are situations where customers feel that if they hang on for another 3-4 months, they don't need any extra money from the bank. Why should they take that relief? Sometimes when a customer is given a new payment schedule and he finds that the amount of money that he has to pay at the back end is higher than what he has to pay now, they think that maybe they have to bring some capital and reduce their debt and then ask for restructure. So many times you have cases which have to be tailor-made to the situation, so it takes time to address that. Of course, the sooner the uncertainty over the Supreme Court the thing happens, the faster banks can start their recovery process. So that is where we see ourselves. We are doing very well in terms of gold loans. The mortgage sales is picking up. We are doing well on KCC and tractors. We are being cautious on corporate as usual. And in MSME, SME working capital, we are worried because we don't want to acquire customers who are under stress somewhere and then we end up acquiring. So therefore, we are being very cautious about who we acquire. So we are being very measured in approaching new business in that area. So that is how we are, and we are quite confident that by March, April, we should be able to step up our new sales further so that we can have a decent growth of loan book in the following year. However, I was just telling my colleagues that we see ourselves actually playing 2 matches simultaneously. The first match we are playing is India versus Australia, 3rd test, where we have to bat 130 overs to achieve a draw, which is like dealing with the stress portfolio. And next match that we are playing, and simultaneously we are playing both matches. The next match we are playing is the 4th match of India, where we have to bat 100 overs plus to win the match, which is our growth this thing. We have confidence, we have the resources, we have the capability, and we are confident. And barring any glitches here and there, we feel confident of dealing with the situation. It can't be, please don't expect that there will be some uniform things that happen. There could be surprises. We don't like to give any surprises to the market. We hope there are no surprises. But given the current uncertainties in the market, while we put our best foot forward every day, sometimes it may not be possible to predict certain things. However, as of now, we are on top of it. Our 700 plus collection team is going out there. We don't have any outsourced collection. Everything is in-house. Going out there, assisting customers in every way possible to try and find a solution for stressed account. And we are not leaving a single stone unturned to help the customer and address the issue. As and when the other recovery methods, mostly the legal methods, starts to open up, we hope that we can achieve higher recovery percentage. So that is where we are. I thought I'll just give you my perspective on this, and we are ready for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sharma Kunal from Perfect Research. Please go ahead.
Yeah. Thanks for the opportunity. Sir, I have 3 questions, so I am listing down together. First, sir, in a banking with a growing size and the scale, the bigger bank benefits from the lower cost of funds and better brand of deposit mobilization. What competitive advantage do we have against the bigger banks? Second, banks like a Kotak kept the saving accounts rate quite high and then kept on reducing saving rate. However, customers didn't shift, and due to which they have a very good CASA ratio at a good cost. Even IDFC Bank is pursuing the similar strategy. So any reason why we are not trying the same? And lastly, can you please share some color on earlier plan of moving to 14% ROE and higher? What's the revised timeline and our strategy for it? Thanks.
Yeah. So when I joined the bank in 2009, people asked me, what is your competitive advantage? We were at 3,000 crore loan book at the time. We are now at about 25,000 crore book. So I really don't know how to answer that question. We are experts in catering to self-employed segment, and we do small ticket loans. We do it quite well, and we have been at it for the last several years, and we don't seem to have any difficulty in acquiring these customers. At times we face challenges because maybe a small bank, maybe an NBFC give them a lower rate. We have an anti-attrition team which takes care of that particular part of the portfolio. And as far as we are concerned, we have been maintaining decent NIMs of upwards of 3.65, 3.7. At one point in time, our NIM used to be even higher than 4%. So we have not had any particular challenge in maintaining that, kind of margin for us. So we focus on small ticket self-employed customers, secured lending, and we don't see too much competition from any large bank there. Yeah, once in a while we do see an HDFC Bank or some other, but generally it used to be an NBFC, but we don't participate in that NBFC space because that is a slightly riskier space. We have chosen our risk appetite and we act according to that risk appetite. That is all I can say for your first question. On CASA, as respect to savings account rates and so on, what exactly is the cost incurred by these various banks for getting that type of deposit? They only will know by paying 7% whether it is the right way to get savings account. We don't have that strategy. We don't apologize for not copying that strategy. Once I was speaking to a CEO of a bank, they have this program of 6%, 7% on savings account. They spend 100 crores on the advertising budget itself. Now, that may suit their balance sheet and their P&L and their approach. It doesn't have to be the same that we have to copy and do it. Our approach is very simple. We want to get small ticket retail term deposit. Our target size for deposit is about 1.5 to 2 lakhs. The cost of acquiring that is quite reasonable. The cost of maintaining that is also very reasonable. Our competitive advantage is that we normally pay anywhere between 20 to 30 basis points, sometimes 40 basis points, higher rate than competition. Yet we are not one of the highest, and we are able to get the deposit. And those deposits customers are cross-sold CASA. We find that to be quite okay. At some point in time, we used to offer higher rates for greater than 1 crore deposit, and we used to pursue that. But we found that we get only higher ticket deposits size, and they are very fickle deposit, which just runs away the moment some rate is changed. I don't agree with you that the moment rate is changed, customers don't go. Small customers may not go, but big ticket customers definitely switch. And small customers to acquire, you don't need to offer any rate. If you want to get a 50,000, 70,000 savings account, you don't need to offer any rate for that. At least that is what we have seen. As far as ROE is concerned, the next 12 months or 4 quarters will go in dealing with the COVID-related challenges. We are working towards a 2.2% cost to average assets metric. Our NIM, barring maybe 1 or 2 quarters of dealing with some NPA or stress book, should be in the range of 3.65 to 3.7. We are working towards 110 basis points of fee. On a steady state, I think our credit cost should be about 50-55 basis points. That is how we plan to have a much higher ROA, that is about 110, 120 kind of ROA. And that will lead us to deliver 14% ROE. I do think that we need about 4 to 6 quarters to kind of reach that level.
Okay, sir. Thank you.
Thank you. The next question is from the line of Rohan Mandora from Equirus Securities. Please go ahead.
Good evening, sir. Thanks for the opportunity. Sir, in the opening remarks, you alluded to the fact that there are a few cases where they are looking to exit the business and sell the property. So just on the process part, wanted to understand as a bank, how will we capture the cash flows from the sale of property to ensure that our loans are repaid? That is one. Second, if you could talk about why the ECLGS offtake has been relatively lower for us. So what is the behavior of the customer? Why are they not taking the ECLGS disbursements?
Yeah. So the property is mortgaged to us. Customer cannot sell the property without our NOC. That is how the whole world operates. If he sells the property cannot be registered because the original documents are lying with us. So the money has to come to us for him to take back the original document. That is how mortgage works. There has to be a society, NOC. I mean, a lot of complications are there. There are one or two cases where customers have tried to sell their property without us, and they are facing fraud charges and other things. So it's very dangerous to sell a mortgage property for the buyer and the seller.
So the money from the buyer will come directly to DCB, or it will get routed via the customer?
It has to come to DCB.
Okay.
That is how it works. That is how all mortgage works across the world, across India.
Sure, sir.
That's the basic of the business.
Sure, sir. And sir, on the ECLGS?
Yeah.
Offtake?
So one banker called me, one senior banker called me and said that, look, we disburse so much of ECLGS, and many of those customers who have taken ECLGS not only use the ECLGS, now they are becoming delinquent, and along with ECLGS, they are becoming NPA. We wanted to conserve the bullet, and till August, since it was locked down and businesses are not picking up, we didn't see any sense in just rolling out the ECLGS and giving the money. Plus, our customers were individual customers. First, government gave ECLGS to non-individual customers. Then, based on representation from banks like us, they opened it up for individuals. Then individuals' approval came much later in the cycle, right? From there on, the first task for us was to get the sanction done in their digital system. We have about 2,000 odd crores of digital system. Last quarter, we were at about 300 crores. This quarter, we are at about 600 crores. We have another 6 months to disburse the loan, which is the March quarter and June quarter. And we are proceeding in a very systematic manner on this. There are customers who don't want this money, and there are customers who want desperately the money. The guys who want desperately the money, we want to be cautious how they are going to use the money. Is their business coming up or not? Because just by giving the money, just because it is guaranteed, doesn't make sense if the customer is not going to help the customer in any way. So this whole process has been created. We have created a grid whereby we are evaluating the customer and disbursing the money. And we are confident that the pace will continue to pick up.
Sure. And sir, in the LAP business, the collection efficiency in the month of December has gone down marginally with November. So anything, any specific observation that we have, or is it just a business?
It has gone down marginally.
Yeah. So sir, any specific trend which is leading to this, or it's just that business as usual, some volatility on a monthly basis?
Yeah, that's what I mean, that it is marginal. So, these are all, very, irrelevant to actually focus on, because like maybe a few customers, or maybe there was some holiday in some place, something like that, so it doesn't really matter.
Sure, sir. Thanks a lot.
Thank you. Before we take the next question, we would request the participants to please limit their questions to 2 per participant. The next question is from the line of Darpin Shah from Haitong Securities. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. The first question is, how much proposals we have further received for restructuring, which can be expected in Q4?
Darpin, I don't have the MIs on how much proposal is there on restructure. Our guidance is up to maybe 3-5% of our business could get restructured.
In total?
In total. No, I mean in the sense because of the COVID-related stuff. And what is happening is that as far as corporate is concerned, since we are not a big bank on corporate, we cannot possibly tell you as to who is coming up for restructure there. Only when we receive some intimation from other banks we will know. As of now, we don't seem to have any problem. More restructure requests are coming from loan against property customers and CV, less from home loans as of now. SME, MSME, working capital also is requests are less from that point of view, and there are customers who are waiting for their business to pick up before deciding how they want to go. So that is the other question, like you are ready with your solution, but the customer is not ready to immediately accept it. So all those things are happening. So I think the whole team is working on it. So let's see how this quarter goes on that.
Okay. So, one small clarification, sir. The press release you have mentioned that, assets to the tune of 160 odd crores, where work is in progress is there for restructuring. So have you already included this 160 crores in the pro forma NPAs? That is 3.7%?
Yes.
So in case this goes through, the pro forma NPAs would have been lower by say 60-70 basis points. So it would have been 3%.
Typically, this work in progress item would be that we are telling the customer that you give me at least 2 installment or 1 installment to show me your this thing, or the customer documentation is pending, or the customer is saying that I am going to bring in some capital and reduce my this thing. So the multiple discussions must be happening. I can't structure it into any one bucket, but we know that we are like tracking these customers quite closely. There is a full tracker that is there which we are tracking it closely. This 159 is already included in that 448.
Okay, fair enough. And one last question.
Is included, so is 30 included.
Okay, yes, fair enough. So one last question, if you can provide some qualitative color on SMA book.
Which book, sorry?
SMA.
We have given you all the collection efficiency and everything. We don't have such a corporate big book to give you SMA kind of thing. We have never given SMA and I have never seen that being out of range in any way. So probably we'll consider in the next quarter what we can do on that.
Okay, fair enough. Thank you, Doctor.
Right now.
Okay. Thanks a lot, sir.
Thank you. The next question is from the line of Mahesh MB from Kotak Securities. Please go ahead.
Good evening, sir. Just 2 questions from my side. First question to Bharat. Bharat, if you can just give us the breakup of provisions, and also on the pro forma numbers on the gross and net NPAs that you've used. The increase is about a little over 450 crores. So does that also include the COVID provisions that you have in your books, such as about 500 crores? Is that net off when you're bringing your net NPA numbers? The first question.
Okay. So I'll give you breakup. You mean the breakup of P&L part, right? Balance sheet part is already given in the press release.
Yeah, that is it.
Yeah. So for 148 crores, the breakup is COVID related 86.1, which is there in the notes to accounts. NPA aging additional provision on NPA accounts 20 crores. Floating and standard assets. Floating in accordance with our policy, the floating provision is now reached 105 crores. We have made 3 crores there, and RBI mandated standard assets 1 crore. So 4 crores over there. MSME and COVID restructuring together 22 crores. And we have a process of internally reviewing standard accounts and making provisions where we feel that we may need specific provision for a particular account before it slips. So that is 16 crores. So
and that is the second question.
Second question on COVID related, what we have put as pro forma, Supreme Court provided, forbearance. The netting off is to the extent of provision related to that, and that is 86 crores has been netted off. 114, sorry, 186 plus 22, 114 crores has been netted off. Yeah. So
just clarifying this, your provisions in the specially says 519 crores.
Sorry?
You've used then?
Versus 519 you are saying?
Yeah, what is the 519?
I'll tell you which one. So
in the 229 it is there.
it is included in the 229.
Sorry, what is 229?
COVID-19 related stress provision which is there.
Okay.
There we have given as a footnote, include the provision of 114 crores for loans not classified as NPA. That is the 114 crores which we have taken in pro forma.
Okay. This is it.
Mahesh. Mahesh, this 448 is the gross number.
Correct.
That includes this 30 crore, this 56 crore. We thought we just give you some color of this 448. That's why we have put all these numbers. To give you an example, if you go to our March presentation, we have said 89 crore is we have taken benefit of COVID and did not declare it as NPA in March and took some provision on that. You can see our March result presentation. Now, a ballpark look at those accounts tells us only 39 crore are still in trouble. 50 crore are below 90 DPD already out of that. We've been able to collect over the last few months. As an example, I'm saying, right?
Okay.
Yeah.
That is understandable.
Yeah, and the other point I want to make is, if you look at our gross NPA without this Supreme Court, which is I think 502 crore, the net of that is only 150 crore. Right? Now, doing a secured business where our loss given default is usually not more than 20-25%, we are very adequately provided on our base NPA. I would like to argue like that. Very strongly provided on the base NPA. There can't be any downside on that. If at all, there could be some upside, is what we believe.
Okay. So, just adding one question on this. See, because you have LAP and mortgage as your primary vehicle for lending, you think that the prices are holding up in the market when you start selling these assets, and you think that the LTVs which is sitting out there adequately covers that we probably will end up with lower provisioning on the credit cost?
What is the question?
Is the LTV still adequate considering the market stress? And would we realize, will the provisions be consequently sufficient or more?
Okay, I want to split this into two parts. First, let me answer the LTV part of it. Below 2 crores or below 1.5 crore type of property, we don't see that much of value drop in the property. And we have taken a lot of examples of people's personal dealings on property as well as some of the other customers and all. We haven't seen much of a challenge. The challenge comes only when customer thinks that he should get more. Actually, there are offers available and the customer agrees we can, we don't have any risk in our principal in majority of the cases. So I would argue that big ticket have a problem on LTV perhaps, but not on the small ticket, definitely not in the 1.5 crore or below area, and certainly not in the 40-50 lakh. Of course, we have made some big error in our valuation itself while lending. That is a different challenge, but that's more like an operational risk, and that is never systemic. It is usually an isolated kind of issue. That is point one. So from that point, we don't think we have any challenge in the way we are providing for these stress book or NPA. At the same time, what I want to mention to you is that we have independent directors and we have statutory auditors. They also see nobody has dealt with COVID type of pandemic. There are no models to rely on, say whether we are good, adequate, and so on. Everyone is actually feeling their way through this whole thing. Of course, if you provide some 33% or so, something like that as an example, one may feel, yeah, it is quite adequate. So I think this process will be iterative. We'll keep reviewing the portfolio. We'll keep doing the analytics and seeing what it is. Because if there are delays in recovery because of the Supreme Court not deciding yet, those things may actually result in needing higher provision till you actually recover. So at the moment, I feel confident that we are providing well, but we will keep evaluating our provision every quarter.
Thanks a lot.
Thank you. The next question is from the line of Rakesh Kumar from Systematics Group. Please go ahead.
Hello.
Go ahead.
Can you hear me, sir?
Yes.
Yes. So first question is with respect to unclassified gross NPA number, where we have provision close to around 24.8%. So is that enough in your opinion?
Which number are you referring to?
I am referring to pro forma gross NPA number minus reported gross NPA number, on which we have a provision of around 25%. So in your opinion, is that good enough at this point in time?
Yeah. No, okay. So, supposing this was not seen as adequate, neither statutory auditor nor independent auditors would have approved these accounts. Okay, so it's not just management estimate, there is a challenge process that would have gone through and all. Second point I want to mention to you is that given that we do secured lending, usually we have not seen our loss given default beyond 25-30%. Having said that, we will continue to evaluate our portfolio to see whether we need adequate provision. As a management team, we have always been wanting to do more than adequate provision rather than do provision at the lower levels. So we will evaluate every quarter and see what it is. Just because we are making provision doesn't mean that we think that is more stress, and that is not the way to see it, because more provision means it is actually strengthening. If we continue to do the recovery, obviously it is going to be reversed. So in times like this, we generally like to behave more like I am from a foreign bank background. Foreign banks, you always take more provision than necessary and then keep working through the recovery process aggressively and then get it reversed. But at the moment, we consider this to be adequate.
Apart from 114 crores, which is the numerator, for denominator of 448 crores, we have given some more details in point 15 of press release. You please have a look at that also. It will help you get a better picture over the adequacy.
Thank you, sir. Second question, sir. Considering the collection efficiency number for the segments that we have reported, there is a gap of almost 5 to 10%. So restructured number, analysis of around 5% and thereon provision at the rate of 10%. Is that number, looking perfect in your sense? So because if the 5% number goes up, then I think, 240 minus 114 number, which is 10% on the restructured number, would have to be increased.
Yeah. So nothing in pandemic, neither we have experience in the past, nothing is perfect. We have to keep feeling our way through this. We have to keep doing analytics. We have to keep doing collection. We have to keep reviewing feedback. So I can't give you a perfect answer on it. All I want to tell you is that our operating profit, even at the current balance sheet, if we keep the balance sheet static also, we would be at the level of 700 to 800 crores per year. At the current margin, at the current cost-income ratio, etc. That is quite a lot of margin of safety for us to make any additional provision that may be required. Okay, so that you please keep that in mind, because we are dealing with secured portfolio. Our unsecured business book would be less than 20% in the entire balance sheet. Rest is all customers' self-occupied property that we have. Therefore, there is a huge level of safety in that customer won't just give up his property and we just can't be in a situation where we are going to have a loss like that. So that is number one. Number two, at the moment, based on whatever information we have in the last 3-4 months, plus all the information we have collected over the last several months during COVID, we believe our restructure would be up to 5%. Now, whether it becomes 5.5% or 4.5%, only time will tell, but at the moment it looks like that.
So can I ask just one last question?
Yeah.
On this MFI book, what is the proportion under FLDG and how much protection, what is the degree of protection under FLDG?
Yeah, we have a reasonable level of protection under that. We have not executed that protection for the simple reason that those loans are also covered under Supreme Court interim order. It would be unfair for us to, all these BCs are our partners and they are making those efforts to collect the money. It will be very unfair on us to just break the partnership or, invoke the FLDG. Then how does he collect this thing? So it is better to allow them to collect as much as they can, and for the balance we will use the FLDG because we are in a long-term relationship with all these BCs.
Thanks a lot for your time, sir. Thanks. All the best, sir.
Thank you. The next question is from the line of Sri Karthik from Investec. Please go ahead.
Good evening, sir, and thank you. Would you attribute your slightly moderate improvement to collection efficiency for the conservative disbursements in the credit guarantee scheme?
No. ECLGS is divided into different segments by us. Customers who have serviced all their installments, customers who have paid in part, customers who are struggling to pay enough of installments. Like that, we have divided this into different customer segments. Customers who are, the majority of the customer sanctions are for really good customers. What we find in the market is customers are saying, look, you can give me this money, but my business has not grown big enough for me to take this money. What would I do with this 5 lakh, 10 lakh and all? So we have given some price break. For example, some of the good customers, we have had an approval from ALCO to give a price break of almost 50, 100 basis points and give them the option of debt consolidation. So point is, there are customers who don't want the money and there are customers who desperately need the money. And we have to balance this to make sure that we give it in a very systematic manner. There are banks who have called us and said that this seems like a sensible approach because they seem to have disbursed all the money and they are now having no other intervention tool if the customer is going down south. So we have acted cautiously on this, and anyway till August or September this tool was not available for individuals in a manner of speaking. So things are proceeding well. We have already done 300 crores in this quarter. We hope to do similar numbers in the coming quarters.
Thanks for that, sir. But I was actually wondering, looks like from a collection efficiency perspective, there's about a 10% gap versus what we were earlier now. So how, I understand 5% could be restructured. What about the rest?
What is the 10%? Actually, it is, if you look at February number, for home loan it is 4% and for business loan it is 7% and for CV it is about 9%. From what it was in February level, there is bound to be some slippage in all loan books. There are customers who have not been able to come back to any decent level of business since after lockdown. There are customers who are possibly thinking that there will be some relief coming from Supreme Court, therefore they are not servicing all their loan. If you look at another data that we have presented for you, 93.3% of home loans have at least paid 3 EMIs or more. Right? Similarly, if you look at business loans, 93% have paid at least 3 EMIs or more. So this number is actually increasing. If you look at customers who have not even paid one installment, it used to be 10-11% about last quarter. We are at about 1.55 for business loan. So it's an improving situation. That is what I would like to say.
Thank you. And just a last bit from my end, in terms of our org restructuring or any changes to our business model, have you utilized this last few quarters to make any major changes?
We constantly make changes to our credit policy because we have an analytical team, we have collection inputs, we have a credit policy team and we have sales. We keep reviewing the portfolio. We use SAS to look at different segments and micro segments and we keep making changes. From the time COVID happened, we have made a number of changes. I don't know which one is major and which one is minor, but these are all sensible changes that we have made in our business model. And we had tightened it all the way down in, say, for example, May, June. But based on what experience we have had from September, October, we have relaxed a lot of the guidelines as we see better, data coming through from the field. So this is a constant work that we do in our bank.
All right. Thank you so much and all the best.
Thank you. The next question is from the line of Mona Khetan from Dolat Capital. Please go ahead.
Yeah, hi sir, good evening. Just a few quick clarifications. You've given us 687 crore of restructured book and then 159 crore of notional slippages as part of the slippages. Which could potentially be restructured. So I'm assuming there's no overlap between these two, right?
No.
Okay. And some color on your restructured book, where all is it coming from? Is it largely CD or does it also constitute LAP as well as home loans? Yeah.
Loan against property, self-employed home loans, commercial vehicle, MSME, SME. These are the 4 major contributors to this book. Some bit here and there would be there of other portfolio, but largely coming from these 4.
Sure. And how much would be the interest reversals taken during the quarter?
For restructured, whatever interest the customer has not paid, you have to reverse that interest. However, on this 448 crores, we have not taken any interest reversal. We have taken it all in the provision.
Okay, got it. And lastly, while you did highlight on the recovery front, just wanted to get some additional perspective. You're largely in the self-employed segment, and clearly that segment has been the most impacted. So, and recoveries historically has been one of our fortes. So, could the recovery rates come down over the medium term because of the given environment?
Even in this situation, we have been able to recover 30 crore. Normally, we recover 60-65 crore per quarter, including gold loan recoveries, which we do auction every month, every 2 months we used to do auction. And actually, it's a threat of auction. The moment you do threat of auction, customer comes and settles, pays off this thing. Most of them, we hardly ever sell those jewelry. So, as you know, the courts, the SARFAESI process all has faced some delays because of the current situation. Plus, we are being very empathetic to customer, and we don't apologize for that because customers have gone through a lot of crises. The last thing we want to do is create some major issue where the bank will be on the back foot in terms of, so we don't use any aggressive technique for collection. We try to negotiate, work through with the customer rather than take any major legal action. All loans, all collections are done by in-house people. We don't have any external collections. So I believe that till such time the matter gets resolved in the Supreme Court, recovery rates may not be better than 30-35 crore per quarter. That is how I see.
Sure, that was helpful. Thank you.
Thank you. The next question is from the line of Jai Mundra from B&K Securities. Please go ahead.
Yeah, hi, good evening, and thanks for the opportunity, sir. Sir, so I'm not asking for guidance, but just to understand, in your opening remarks, you had said that normally we would have 2.25% kind of a slippages. So assuming the 5% restructuring happens, so in a way the borderline stress cases are clubbed into restructuring. Maybe fourth quarter is where you may also see some slippages of the borderline cases. So from 22 perspective, outside of the restructured book, should we be back to 2.5% slippages outside of the restructuring book? Will that be a logical conclusion?
I'm not sure that can be a conclusion. The reason for that is, think of March, May we came into standstill, and the standstill somewhat got removed in September, which means that some of it would start to hit us now. Now, I'm not sure after this stress another 2% will happen or not, but however only time can tell. At the moment our focus is on using the intervention tools given by the government and the RBI to try and address the pain points in the portfolio for the customer and then see how that pans out in this thing. The other point I want to say is if customers who have been able to pay their installments all through or immediately are starting the, once the moratorium is over, should be very strong portfolios. So therefore, I don't see much of an issue on that. Our job on that would be to protect the portfolio because we don't want some other bank to do a bad draw on that portfolio and take it away because that's a very good portfolio for us.
Right. Okay. So actually, when I said 2% or 2.25%, that was outside the restructured book. Even though, in a way, as you said, the portfolio which comes out into 22 should be of much better resilience.
We hope so. I mean, that is our that is what our thought process is right now.
Okay, sure, sir. And second on restructuring, sir, in your last interaction, I mean, in the last quarter, we had said 3 to 5%. And after that quarter, all agencies and most of the banks have lowered their restructuring guidance. And even DCB Bank, at this point of time, we have only seen 200 crores of additional restructuring requests. So, just wanted to check, sir, why have you still been on the higher end of the range, just to understand that?
All banks declare their moratorium at 95%, 97%. And then you saw what was the report sent by RBI in terms of private banks moratorium. I hope you have seen that report.
Yes.
So we have been reporting our moratorium the most correct way, in my opinion. Similarly, I don't know what their other bank's portfolio is. I'm only talking about my portfolio as to what the self-employed segment is, what they are going through. If a customer has got only 60-70% of his sales back since the lockdown, it is unreasonable to expect him to do 100% of his loan servicing. If you do that, he will become NPA and then you won't be able to recover it. It is better to err on the side of caution to give him that restructure option, and they can always exit that restructure anytime they want. And so far, our collection team doesn't seem to think that that restructure book would perform so badly that we will have to, so at least the experience has not been that bad. We don't restructure just to save NPA. We restructure because we need to give that customer a chance to bring the business back to some level of normalcy. So I can't comment about other banks. You can look at what they commented on moratorium and what they are telling now, and then you decide for yourself.
Sure, sir. And the last thing, sir, on your term. So apart from so I'm not second guessing RBI, but what has the bank or has there been a formal recommendation which has gone from board side to RBI, or because other banks which are also having the succession planning, they have also done similar things. So I may have missed out, but
ask your question directly. What is your question?
So the question is, has the board sent your renewable thing?
Yeah. So regarding succession planning, there is always a formal process of succession planning review by the board on an annual or any frequent basis, which is also reviewed by RBI. These are all matters that have to be done very well by the board and the management team, and gaps, if any, have to be addressed in a given time frame. Regarding renewal, RBI requires renewal application to be sent 6 months in advance. If you recall, one of the bank was actually penalized for sending their CEO renewal request late. So I'm quite sure that process is underway. What is the outcome of the process? You have to wait.
Right, but the renewal application has gone before 6 months. Within that 6 months timeline, right?
We have usually not, screwed up on that deadline.
Sure, great. Thank you, sir, and all the best.
Thank you. The next question is from the line of Rahul Maheshwari from Ambit Capital. Please go ahead.
Yeah. Good evening, sir. First of all, to the team, and very good disclosure.
We can't hear you, Rahul. We can't hear you.
Is it better, sir?
Yes.
Yeah. I know, sir, it would be very difficult for me to ask this question, but as in Q3, you had witnessed some kind of guidance in terms of you are witnessing a flattish kind of growth. But now we are on a month-to-month basis, we are on an improving trend. Two things. So one is on a holistic basis, and second on mortgage. No doubt there is a little bit being cautious on LAP, but on housing loan, what kind of growth are you witnessing? As we have seen from small size to large banks are having a very good growth. So a rough on color on this would be very helpful, sir, because asset quality you have given very detailed, but on growth side it would be very beneficial, sir.
So first of all, we are increasing our team size in mortgages and home loan, and our headcount numbers to start going up from this quarter onwards is what our expectation is. And we are present in most of the cities. Our focus area is going to be very strongly on home loans, continue to be strong. If you look at our LAP versus home loan proportion is constantly increasing for us as compared to LAP, but the segment remains the same. It is the small ticket self-employed segment, and I would say that salaried people employed in small companies. That is basically our target market. We are able to get very decent ROE on loan by loan on that thing. Although the collection intensity has to be pretty strong in that, because these customers are not regular in payments unless you keep reminding them. But that's the basic segment that we are talking about. We are doing quite well on KCC and tractors in AIB business. So we think that that would grow. our intention is to build back a growth of at least, a double digit to say high teens kind of growth in the coming year. So we are building capacity for that. But it will take time. Probably by March, April, we will start to rev up. Already the last quarter has been pretty decent for us as compared to the previous quarter. So we hope to keep continuing to build that. And that's where it is. CV, as far as CV is concerned, we will take maybe another quarter or 2 quarters to stabilize that business before building back the volumes on that business. Hello?
Thank you. The next question is from the line of Dixit Doshi from Whitestone Financial Advisors. Please go ahead.
Yeah, thanks for the opportunity. Most of my questions have been answered. Just one question. So we are very good in asset quality and maintain, in terms of recovery. But given our lower loan book and lower size of the book, how do you see the growth from FY22 onwards? Can we, clock the double-digit growth or a low or a high double-digit growth?
Starting FY21-22, the intention of the team is to clock double-digit growth. Initially, it may start off slowly, but then we'll build back the thing. We are very strong in terms of our understanding of this segment. Cautiously and consciously, we took a step to make sure that we understand what exactly is happening in this segment in the last few months. So post-COVID, now things are steadily improving. So like I said, we are playing 2 games here. One is to manage the stress portfolio. Another is to, strongly build, the sales momentum. Last quarter has been pretty good. We are succeeding in it. And step by step, we hope to build back, especially in home loans, gold loans, LAP, KCC, and tractors. These will be the big focus areas. Gold loan, if you see, we have grown by 100% in the last 1 year. And from a normal 20-25 crore per month, we are already at about 180-200 crore of sales per month in gold loans. So it's a massive change we have already done in gold loans.
Okay. So basically, pre-COVID, we used to usually say that we can double our book 3.5 years. So can we expect that from obviously COVID had hit us, but say from FY22 onwards, we can assume 3 to 4 years we can double our book?
We can give you that guidance in about 1 or 2 quarters. As we are just building our momentum back, we need to see how that pans out. And we certainly will be able to give you that guidance in a couple of quarters.
Sure. Thanks. That's it from my side.
Thank you. The next question is from the line of Anand Ladda from HDFC Mutual Fund. Please go ahead. Anand, your line is in talk mode. You can go ahead, please. We would request you to please unmute yourself if muted from the handset. Due to no response, I have muted the line. The next question is from the line of Rajiv Agrawal from Sterling Capital. Please go ahead.
Hello.
Yes.
Hello. Sir, can you give the details of this unsecured loan book? In which sectors do you lend?
What?
Unsecured loan book. In which sectors do you lend normally? Can you give some details about it?
Loan book.
Which are the unsecured loan book? 20% unsecured loan book talked about.
We are doing business with fintech companies. We also have BC loans, BC MFI loans, which is unsecured. Those are 2 predominant unsecured book that we have.
Okay. And sir, one more question, sir. This profit on sale or investment, what exactly is that?
This is GSEC sales in OMO.
Okay, so can we expect this to happen next quarter, similar type of profit on sale or investment?
No, I do wish, but no, we cannot.
It entirely depends on OMO announcements made by RBI. Plus, whatever announcement they made, we should be having that portfolio for us to sell. Third, we should be wanting to sell that And so there are many variables in that. So we see how it goes.
Okay, thank you, sir. Thank you for the opportunity.
Thank you. The next question is from the line of Lalit Deo from Equirus Securities. Please go ahead.
Yes, good evening, sir. Thank you for the opportunity.
You have to speak louder.
Yeah. Is it audible, sir?
Okay.
Yes, we can hear.
Yeah. So I just wanted to ask, sir, on the cost of deposit front, so over a year, in the last 1 year, while there has been a 50 basis reduction for us, but for major banks, there has been reduction of more than 80 to 100 basis year over year on the cost of deposits. So just wanted to understand, sir, when the interest rate cycle will reverse, so will we be slowing? Will we change the interest rate in a slower rate than the bigger banks, just so as to maintain the differential of more than 150 basis of interest rate?
Our focus is on retail term deposits to individuals. Our sweet spot on that is 1.5 to 2 lakh rupees kind of ticket size. That is what we focus on. Our rate is usually about anywhere from 25 to 40, 50 basis points higher than some of the bigger banks, but not one of the highest in the industry, but we are in the top bracket of the industry. Our strategy is to get retail term deposits and then we cross-sell CASA products to those customers. We find that to be stable because it's usually a 3-year deposit, but average it will be about 20, 22 months kind of deposit. Not only the deposit when it comes, it stays for that long, plus customers deepen on their own by getting more deposits. So it seems to be working for us both from a cost point of view and from a stability point of view. As far as other banks are concerned, what strategy they follow, you have to see that for them and how it works for them. For us, the segment that we are targeting for loans, self-employed, works well for us. It has given us very reasonable returns. Our NPAs have been in pretty good control. Of course, during pandemic, they were one of the worst hit, but we are starting to kind of get control over that portfolio. As far as the deposit is concerned, we find it from a total cost point of view, that is cost of operations and cost of deposit, targeting retail term deposits and cross-selling CASA seems to be a better opportunity for us, and that has enabled us to reduce our dependence on bulk deposit to a large extent that we have only about 7% of top 20 deposits. So that gives a lot of stability to our balance sheet.
Sure, sir. And sir, just one data keeping question, sir. What would be the overall disbursements per quarterly during pre-COVID times?
We have given you the disbursal what is happening now, and we hope to build on this quarter coming March onward. We are building our capacity. We are rejigging our scorecard. So we hope to do better such that we achieve at least a double-digit, probably high teen kind of number next year, and that's the intention at the moment.
Okay. Thank you, sir.
Thank you. The next question is from the line of Anand Latta from HDFC Mutual Fund. Please go ahead.
Am I audible, sir?
Yes.
Sir, just you in the press release you indicated that you expect your cost to be down by 10% for the full year. If you can explain what percentage or what part of this cost reduction is due to lower business and what part is due to cost cutting or permanent or structural in nature?
On the permanent cost structure, we have told you that we are working towards a 220 basis point cost to average assets. Hopefully, in about 18 months to 2 years, we should be able to achieve that number, predominantly through process changes, accelerating our digital agenda, improving on productivity. Those are a lot of things happening in the bank on a continuous basis. As far as cost is concerned, this year, we kind of readjusted our headcount requirements based on the kind of business that was coming through in the first 2 quarters. That has helped us something. The lower business in LAP in the first 2 quarters has helped us to save some costs, and also some of the negotiations that we have done with various vendors during this time to reduce costs. All that has helped us to kind of lower our cost.
So if you can quantify, like of the 10% reduction in cost this year, what part will be due to lower business?
We are unable to quantify that. That is the kind of disclosure we can give you at this moment.
Okay. And so second, just a data keeping. In the press release, you indicated 687 crore of loan likely to get restructured. This includes the pro forma slippages of 400 odd crore rupees. Is that correct?
What does it come again?
In the press release, you indicated 687 crore of loan which are likely to get restructured.
Not likely to get restructured. Restructured is what we have written.
Okay. And this includes the pro forma slippages or pro forma slippages and... Okay.
No, that doesn't include that.
So 487 crore of pro forma slippages plus 687 crore of restructuring. Is that the total stress we have?
448.
Okay.
In 448, we have given you clarification that 30 crore has already moved below 90 DPD. 56 is secured gold loan, so I can't see any stress in that gold loan. In 55 crores, we are seeing that we are partly covered by FLDG, so only part would be stress. So we have given you some kind of indication on what that 448 looks like. And 687 is where various customers have asked for some kind of relief restructure. We have restructured those loans.
Correct. And we have a floating provision of 229 crores cumulatively.
No, floating provision is 106 crores. 229 is COVID-related stress provision.
Okay. So we would have done 106 crore of floating provision, 229 crore of COVID-related provision, and 10% of provision we would have on the restructured book.
Yes.
Okay. So effectively we have 229 plus 100, 329 and another 100. So almost like 430 odd crore of total provision available on a 1300 crore of stress book.
I don't know how you are calculating. We have given you the details on what all provisions they are holding. And as far as our gross NPA is concerned, we are left with only 0.56 of net NPA, which means that gross NPA is provided almost like 85 odd percent. Right?
Okay, fine. Yeah. I'll take it offline.
Yeah, thanks.
You can look at the serial number 13 on press release. It will give you some idea.
Okay, sir.
Thank you. We take the last question from Kunal Sharma from Perfect Research. Please go ahead.
Thank you, sir. So, sir, I just have one question. Sir, we can see the non-interest income has a big jump, which is at 66%. So, can you please give some color on it? How much of it is sustainable going forward?
So the base income, we of course had a one-off income this quarter because of the OMO GSEC sale. But other than that, even the base income is coming back steadily towards the pre-COVID levels. For example, I think if you look at our core fee income, I would say it has grown by almost 25% as compared to the previous quarter, like the processing fee, ATM fees, renewal fees, CASA-related fees, all that, and the third-party income, all that put together has grown at least by about 25% as compared to the previous year. Previous quarter, sorry.
Yeah, previous quarter, no? Okay. Okay, sir. Thank you.
Great. Thank you very much, everyone, for attending this call. Have a nice weekend and look forward to speaking to you next quarter. Thank you very much.